for us, ladies and gentlemen, to note dates. We have to note dates. We are told these are financial statements here which are extracted from the accounts of Pantero Limited and its investee companies, Star Limited and Able Limited, as at 31st December 2011. So these are the dates of financial statements. So I can see them live here. And then what are they telling me down here, ladies and gentlemen? What they're telling me down here is this. They're telling me that Panther Limited acquired 80% of the ordinary shares of Star Limited for 66.8 million on 1st July 2011. 1st July 2011 is the date of acquisition. Panther Limited also acquired 50% of the 10% loan notes of the company on the same date. The fair value of NCI interest were 1280. So you're told on 1st July 2011, Panther Limited further acquired 80,000 shares of Able Limited at 55 per share. The profit after tax of Star Limited and Able Limited for the year ended 31st December 2011 were $1 million and $6 million respectively. We are told in this case here, note 4, on the date of acquisition, the fair values of the assets of Star Limited were equal to their carrying amounts except for land and plant, whose value were 200,000 and 800,000 in excess of their carrying amounts respectively. Plant is to be depreciated on a pro rata basis over the remaining useful life of 4 years. Pantero Limited sold goods to Star Limited for $3 million at a markup of 50% in October 2011. Half of these goods were included in the inventory of Star Limited as at that date. As at 1st December 2011, Star Limited owed Panther Limited $750,000. During the year, Panther Limited sold goods to Simba Limited, a company domiciled in Nigeria. The goods were invoiced in Naira currency. The total value was shillings 500,000, and the exchange rate on the date of transaction was 1 shilling to 10 Naira. Simba Limited was to pay in Naira. The exchange rate as at 31st December 2011 was 12.5. So you can see in this case here, an exchange rate what here? Fluctuation. So you're going to have in this case here a currency gain, foreign currency gain, or foreign currency loss. Quite easy. I'm so sure whenever students read something of this nature, mostly they switch off. 100% they switch off. We are told note 8. None of the 3 companies paid dividends during the year. As at 31st December 2011, the goodwill of Star Limited and Able Limited is estimated to be impaired by 200,000 and 100,000 respectively. Assume profits accrued evenly through the year. Group statement of financial position is what they want us to give us, to give them. Ladies and gentlemen, this is a very easy question. I have Panther and Star. I don't have a problem with Panther and Star because Panther and Star, so we have Panther, I'll call it P or Pan, and then we have Star. So we are told in this case here that we acquired 80% of Star. So who is Star to us? Who is Star to Panther? Somebody talk to me. Who is the Star to Panther given this big shareholding? This big shareholding, it's more than 50%, isn't it? It's more than 50%, way high. It means for sure that we are controlling a Star. So if you're controlling Star, then Panther, of course, will become the parent, and the Star in this case here will become our subsidiary. And also in this case here, Panther went ahead and acquired who? And acquired another company called Able. We are told Able, we bought 80,000 shares. So we need to know how many shares does Able have in total. How many shares does it have in total, ladies and gentlemen? We are told here, note 2, that on July 2011, Panther Limited further acquired 80,000 shares of Able Limited. So go to the balance sheet of Able and establish how many shares does it have in total. You guys have this question paper already. So in the balance sheet, ladies and gentlemen, of Able, we can see equity here. Equity. Can somebody in this case, of course, Able is the last one. Able is the last one here. You know, we have here Panther, we have Star, and then we have Able. So in this case, you can see ordinary share capital of Able is 2,000. Out of this ordinary share capital of Able being 2,000, is there somebody who can give me the number of shares of Able? Come and give me the nose of Able. Is there somebody who can give me the nose? Nose of Able. We know this is very easy. You take the share capital, you divide by the par value. You take the share capital, you divide by the par value. So the share capital there, ladies and gentlemen, is 2,000. And the par value, in this case here, we are seeing what there? The par value is 10. Are you able to see the par value? Are you able to see the par value? Are you able to see the par value? You can see the par value is given here. Ordinary share capital, par value, 10 each. And these figures, ladies and gentlemen, these figures, they're in shillings thousands. They're in shillings thousands. So whatever you're reading there as 2,000 is supposed to be 2 million. If you're working it out that way, it's supposed to be 2 million. You read it in full, 2 million. So 2 million divided by 10. So then this will give me how many shares somebody here? How many shares somebody here? Today you're not talking. Oh, I can see so many beautiful 27 comments. 27 comments, 40%. I can see students who are asking, about where is this question paper? Can we have somebody in this case who can save this question paper somewhere, and then you'll be attaching it here often, like say every 5 minutes you attach here. So remember, somebody called Susan is telling me to repeat here. We are looking at number of ordinary shares of ABLE. How do you get number of ordinary shares of any company? You take the share capital provided, the equity share capital provided there, you divide by the par value. So if you look at ABLE, Limited, of course, they have told us we are acquiring 80. They've told us we are acquiring 80,000 shares of ABLE. All right. And the ordinary share, you can see ABLE, ordinary shares, share capital, in shillings is 2 million, because here it's thousands. So if you take this 2 million divided by 10, then you'll be able to get the 200,000 shares, 200,000 shares that we have as ABLE company. And in this case here, Pantera has bought 80,000. So if you convert this to percentage, what percentage are we getting, ladies and gentlemen, there? What percentage are we getting, ladies and gentlemen? What percentage are we getting here, ladies and gentlemen? They are not talking to me, these guys. They are not talking to me, these guys. All right, so you're getting 40%. We are getting 40%. So is there somebody then who can tell me who is able to Pantera given the 40%? Are you able to remember the threshold? The threshold. Remember, any investment more than 50%, that investment will be a subsidiary. Exactly 50%, that investment will be a joint venture. Between 20% to 49.999999. Here, 20% to 49.9999%, like that. This becomes an associate, and for sure 40 is here. So it means that ABLE is an associate. ABLE is our associate. ABLE is our associate. So up to there, are we together, ladies and gentlemen? Remember, I always quote the word somehow. We may not be together 100%. You guys are doing so many things at the same time. It'll be very hard for us to be 100% together, because I'm so sure, like now, there must be somebody who is eating githeri as they are studying. So how do you munch this hard maze? And then you're trying to understand this, it becomes very hard. So you can't understand 100%, but somehow are you able to follow? Somehow are you able to follow? All right. How did we get the 80K? It is given 80,000. We bought 80,000 shares. We bought 80,000 shares. We bought 80,000 shares. So remember, we have many teachers here. Whenever you see some of those questions that I'm not able to see, please surround them, circle them. Those areas, like on 1st July 2011, Pantera Limited further acquired 80,000 shares of ABLE. So 80,000 out of the 200,000. I hope that assists you. Now then, having known this structure, what I will do, I will not read any notes to the accounts. Never do that. Don't read any additional information. Don't. This examiner wants you to come and give them what here? Consolidated statement of financial position. Do exactly what this examiner tells you. Leave alone those additional information notes. Leave them out. Leave them out. So in this case here, they want me to give them consolidated. They want me to give them consolidated statement of financial position. So the name of the parent company is Pantera. So you call it Pantera. So we have here Pantera Group statement of financial position. Of course, this should be down here in full as that. Those things I know you are very good at them. Of course, for me, I'm putting it up there because of my size of space. So then we start consolidating. So we start with non-current assets. So you write there, non-current assets. So non-current assets, you have taking that thing the way it is given in that question. If you are a BDA student, you simply copy the format given. You simply copy the format given in the balance sheets given there. You simply copy there. So like now here under non-current assets, we have property, plant, and equipment. Then we have in this case here investments. These investments, of course, I know I have an associate. I have an associate. So I will have what we call investment in associate. I'll have investment in associate. Will I have investment because I've seen I have a subsidiary? Will I have investment in a subsidiary? Will I have investment in a subsidiary? Remember, subsidiary is exactly me. Subsidiary is exactly me. Will I have investment? So if I invest in my wife today, will I keep on standing on top of the roof and saying that, hey, I invested in you. I even paid dowry of 3 million. No, that is you. I took you to a master's class. No. The only thing we don't talk of investment in a subsidiary. The only thing we can do is to sit down and harvest what we call goodwill. We can only enjoy goodwill. So in this case, here, investment in subsidiary, that is always replaced with what here? Investment. No. It's always replaced with goodwill. So I will do this working later. So here we have this, and then of course we shall have what we call, I must introduce this. We shall have what we call other investments. I must introduce this to you, other investments. So for PPE, remember I'm consolidating. Group has got which components? The group has the parent company and the subsidiary. We do not consolidate associate at all. Associate will only have one line, this investment in associate. We shall not consolidate it at all. All right. So if it is PPE, I will take the PPE of the parent Panther, 10,000. 10,000. And then in this case, here I'll come and add what here? The one of Star Limited, which is 4250. So of course, the ones who are doing BDA there, of course, I'm seeing what you're doing. You're saying equals here. Equals. And then you say 10,000 plus 4250. Investment in associate, I'll do this working later. Goodwill, I'll do this working later. Other investments, I'll do this working later. I just leave them like that. I leave them like that. Of course, for the Excel students, you'll be able to get your answers directly, but later on, you will revive these formulas because of the additional information. So from there, we go to the current. We go to the current assets. So current assets, what do we have here under current assets, ladies and gentlemen? I can see inventory. I can see inventory. I can see inventory. Inventory, I'm consolidating the parent and the subsidiary only. So the parent is 2,400 plus in this case here, the one of the subsidiary, which is 1,250. Don't consolidate the associate figures. Actually, what I normally do myself, this column of associate, I normally cancel it. I normally give it one line so that I don't confuse because we don't consolidate associates. We only consolidate, we only group. Group, ladies and gentlemen, is parent plus subsidiary. Only that. Parent plus subsidiary. Only that. We don't bring in associate. Now, apart from inventory, we have receivables. So receivables, I'm taking the one of the parent, which is 3,800. 3,800 plus in this case here, what here? 3,800 plus 2,000. From there, we have cash. So cash, I'm taking 1,300 plus. I can see so many guests. I hope, Ngera, you are still attaching that paper there. I can see so many guests. Please attach that paper there often. So cash like that. So from there, of course, we have our total what here? We have our total assets. We have our total assets like that. All right. Now, after you get total assets for us, look at now how do we finance these assets. So to finance them, we are not thieves. We are going to look at the capital structure. We are going to look at the equity and what your liabilities. So we begin with equity. I'm supposed to continue writing down here, but this space is not very, very good for me. So then I'll be able to come here and create space. So I'm looking at equity. So equity, we begin with share capital as usual. Who remembers anything about share capital? Free mark. So in this case here, we only take the one of the parent company only. So in this case here, share capital parent only. And I can see for sure the figure of the parent there, which is Panther. Remember, Panther is the parent. So in this case here, we have 5,000. Allow me to pause a little bit, ladies and gentlemen, and ask whether the BDA students are able to cope up in terms of typing in Excel. BDA students, are they able to cope up? I can see One yes. I can see Ndungu saying yes. Oh, then you guys are great. You guys are great. You guys are great. You guys are great. You are good ninjas. You are good ninjas. Good ninjas. So in this case here, remember that share capital, share premium, those ones we shall only take the one of what year? The one of the parent only. From there, we have retained profits. We have retained profits. We have retained profits. We have retained profits. What do you think about this retained profits or retained earnings? What do you think about this retained profits or retained earnings? I know you're not thinking anything about it. I know you are not thinking anything about it. Not even later, Dave. I shall never do this working in an exam. I shall never do it. I shall never do it. This working, I will leave it to the examiner to decide what, in this case, to do with it. It will not deny me any mark. You'll be surprised, like this is about 14 marks. Normally in group consolidation, we talk about the ticks. They'll mark ticks like mean whichever number you get, and then they'll say any 7 at 2. If they are 14, any 7. And you'll be surprised when you arrange your work very well, you'll end up getting any 7 very fast. You don't need to get like everything. For the years that I've been involved in marking, I know, ladies and gentlemen, the students who look for perfection in AFR and BDA, they don't pass. This is a paper that acknowledges you being a human being. And a human being in this case is to have so many errors as possible, so long as you complete and get to touch every section of the paper. Every section of the paper. But if you're looking for perfection, like you start doing this big retained earnings account, and then you take 30 minutes there, and that working is even never marked at all, international what year international disaster. That would mean that I teach you again next semester. I don't want to teach you again next semester. Or rather, if I put it very well, I would want to teach you at a higher level, either at workshop level or at BDA level if you're doing AFR. Amen? Amen. Let's pause a bit and think, because now this is about low-hanging fruits. Low-hanging fruits. It should be like that, yes. So I have to tell you the truth. So this one, of course, I'll do it in class here because I'm also looking at your future professionalism in terms of having the capacity, but in an exam, that will be left out. And then now we have a new equity component. Is there somebody who can tell me what the name of this new equity component will be? Is there somebody who is able to tell me what the new? Thank you so much. Not share premium uongo. NCI uongo. NC hapa hakutakuwa na share premium because ama kuna share premium hapa. Hakutakuwa na any share premium haitakuja hapa because hakuna new shares which were issued to acquire. This is a cash acquisition. So in this case here, the only new thing coming here is known as non-controlling interest NCI, and you guys are very bright working. So I leave that. Then I go to non-current liabilities. I go to non-current liabilities. Non-current liabilities, what do I have? Oh, yeah. Non-current liabilities, and remember, this is coming from a FRA question, which is intermediate level, but a very serious question. Nowadays, they can't bring such a question in FRA. This is an advanced level question. You even saw a place where they have foreign exchange. So I would want to take this opportunity to market our books. We have great revision books at RCM for all these papers, apart from BDA. BDA is the only one that I haven't produced a revision kit. These revision kits, we are selling them. We have an offer. They are going for 1,000 bob. They have CASNEB's questions and answers. So you need to promote this kind of mwalimu who really comes every lunch hour to give you guys free content. You need to promote this mwalimu. We are selling them for 1,000. If you would need, in this case, to buy, please, this is our number, 0793 555 000. 0793 555 000. I'm so sure they will be of help to you. Call somebody today and place your order. All right. So non-current liabilities, I can see 8% loan notes. 8% loan notes. So the 8% loan notes, what do I have there? I can see the parent has 2,000, subsidiary 0. Then I have 10% loan notes. 10% loan notes, 10% loan notes, 10% loan notes. I can see the parent has 0, but the subsidiary has 1,000. Then we have, in this case here, current liabilities. So current liabilities. So current liabilities, what do we have there? We have payables and tax. We have payables and the tax. I'm only consolidating. Consolidation means adding. I'm only adding the figure of the parent and the figure of the subsidiary. So 4750, 4250, sorry. 4250, 4250 plus 1250 plus 1250. And then taxation, what do I have here? 750, 750 plus 500. Now, ladies and gentlemen, I've been able to do so much. If the examiner springs from somewhere like a rabbit and it says you only have 5 minutes left to the exam end, only 5 minutes left, what will I do? I'll pick my calculator and of course, in this case here, compute whatever is here. And if I do that, I'll get a minimum of 3 marks. Minimum. Not 3 marks, but 3 ticks. 3 ticks means what here? 6, because each is at 2. That is 6 marks out of 14. Because there are so many things here that will not need any adjustment, like taxation. Like some of these loan notes, in this case here, one of them will not need any adjustment. All right? Like when you look at cash rarely, not unless a question has got cash in transit. And if it has, I'll just add it there. Rarely does it have any adjustment. Like in this question, it doesn't have any adjustment. You've got no reason for failing in this FRA or advanced FRA paper. These are papers that you should be able to pass. Just like the theme of this class, tulisema ni mwaka ya kupita. Hii mwaka unapita FRA, BDA, unaenda ukisonga. Hii 2024 ndio mwaka ya kumaliza kila kitu. So long as unajua hizo shortcuts. Sasa tuanze straight away hizi notes sasa. Tuanze additional information number 1. Panther Limited acquired 80% of the ordinary shares of Star Limited for 6.8 million on 1st July 2011. Panther also acquired 50% of the 10% loan notes of the company on the same note. Please, let's go to the loan. 10% loan notes of Star. 10% loan notes of Star. What are you able to see? What amount are you able to see there? 10% loan notes of Star. Go to the balance sheet. 10% loan notes of Star. How much are you able to see there? How much are you able to see there, somebody? How much are you able to see there? 1,000, isn't it? 1,000. These guys are not seeing that. 1,000. It's only Purity who is seeing that. So out of that 1,000, 50% is owned by who? 50% is a loan given to me by my father, Panther. That loan is fake. So you come in this case here to 10% loan notes. These are 1,000. 50% is 500. 500 is owned in this case here by my father. Was given to me by my father. So I gave him the notes. He gave me the money. So any inter-owing, any internal owing is always what here? Is always fake, and it has to be removed from group accounts. That's a free mark. There will be no any adjustment, trust you me, for these loan notes. So I know in this case here, if I have shillings thousands here, I know in this case here, I'll be having 500 for the 10% loan notes, because I can see that Panther took in this case here, ladies and gentlemen, Panther in this case here took our notes, 50% of our loan notes, and they gave us that money. They gave us 500. And of course, in this case here, we recognize that loan, but we know that that 500 will never be paid. We are only accountable for the loans that we receive from third parties, not from the loan that I receive in this case here from my father. I don't know whether I'm making some sense there. And this is a very common statement in group consolidation questions, that a loan was given by the parent. This is very, very common. Very, very common. Are we really together here? Are we able to pick somebody there? It's a free of charge mark normally. Free of charge normally. Free of charge. So long as in this case here, this loan was given, of course, after acquisition. Like that date during acquisition. This is when this loan was given. That's okay. Not unless it was given way before. But I mean, what relationship would they be having for it to have given? No. It's on the date of acquisition, we discover that this subsidiary is really struggling. We give them a loan. And if we give them a loan, we'll account for it. But at the end of the day, that loan is what here is fake. So you'll be able to remove it. That's a free mark. Now, ladies and gentlemen, then what I'll do, because I can see I've been given NCI, I will straight away compute goodwill. I'll straight away compute goodwill. Let's compute this goodwill pretty fast. Goodwill. Oh, will I be able to get this space really? Will I be able to get this space? Abracadabra. God assist me. Let me try to squeeze it here. Goodwill. Is there somebody who knows in this case here the formula of computing goodwill? Is there anybody who knows the formula of computing goodwill? Anybody who could be knowing the formula of computing goodwill? Anybody who could be knowing the formula of computing goodwill? We take what minus what? What minus what? Goodwill is what minus what? Purchase consideration less net assets. Thank you very much, Ndungu. So in this case here, purchase consideration, we have in this case here the parent's consideration. We have the parent's consideration. Huyu parenti alitoa pesa ngapi? The parents, yeye alitoa pesa, alitoa do ngapi? Huyu parenti alitoa do ngapi? Huyu parenti alitoa do ngapi? Parenti alitoa do ngapi oye? To acquire this 80%, alitoa do ngapi? Hapa kwa star oye, niko na Ndungu peke yake tu, mimi na Ndungu tu, wazee wawili. Lili pia ameingia kwa hiyo. So in this case here, we are talking of thousands. So in this case here, the parent gave 6,800. Remember, this guy never accounted for, never purchased 100%. We have another purchaser. This other purchaser is the one who has the smaller, the non-controlling interest. So we have in this case here, NCI's consideration. So basically, NCI's consideration will be the fair value at acquisition. Their fair value at acquisition. Is there somebody who is able to see the fair value of NCI? Ilikuwa ngapi somebody? The fair value of NCI ilikuwa ngapi? Fair value of NCI ilikuwa ngapi? We are doing very well. We are doing very well. 1280. 1280. From there, ladies and gentlemen, I'll be able to get the total consideration. I will be able to get the total consideration, abracadabra. Total consideration, abracadabra. Thanks, Ngera. I can see you're doing a very good job. 8080. So out of this 8080, we come and less net assets of stir, net assets of sub, which is star at acquisition. So is there somebody who can give me the other name of net assets? Whenever you hear of net assets, in this case here, what comes to your mind? What comes to your mind? What comes to your mind? Anytime they talk about net assets, what comes to our mind? Anytime they talk about the equity components, yes. And this equity components, we have share capital. We have share capital. We have in this case here, retained earnings. And remember, retained earnings, you have to be very bright because these are retained earnings at when? At acquisition. Retained earnings at acquisition. Retained earnings at acquisition. Then we have what we call fair value adjustments. We have what we call fair value adjustments. In the case of any other thing, we shall be able to read. So please go to the column of star. Go to the balance sheet of star and give me the share capital of star. Give me the share capital of star. Is there somebody who is able to give me this share capital of star? Oye, niko peke yangu lakini I will overcome. Is there somebody who is able to see the share capital of star? The share capital of star. The share capital of star. Is there somebody who is able to see the share capital of star? Share capital of star. Share capital of star. They're telling me it is 1,500, isn't it? 1,500. Remember, this one never fluctuates. 1,500. 1,500. And then when you read in the entire book, in this entire book, ladies and gentlemen, there is nowhere they're telling us about retained earnings of this subsidiary at nowhere. So whenever they don't, in this case here, give me these retained earnings of the subsidiary, then I have to use reverse gear. I must use reverse gear. Look at the retained earnings at the end. Retained earnings at the end. Is there somebody who is able to see the retained earnings at the end? Retained earnings at the end of star, which are the same as retained profits. Retained earnings at the end, which are the retained earnings at the balance sheet date. Retained earnings at the balance sheet date. So it's 4,000. So 4,000, but now you have to account for. You must first of all count. This company called Star, we stayed with it for how many months in the year, in this current year? We stayed, remember we acquired it on 1st July 2011. We acquired it on 1st July 2011. This is the date of acquisition when we acquired it. But reporting, if you look at the balance sheet date given there, it is 31st December 2011. 31st December 2011. Can you kindly count from here to here? How many months do we stay with it? 6 months. We stayed with it for 6 months. We stayed with it for 6 months. We stayed with this for 6 months. So then I would want to know how much profit did it make, this star subsidiary called Star. What was its profit for the whole year? I can see the profit in note number 3. In note number 3, I can see the profit. The profit after tax of Star Limited and Ebo. I don't want Ebo. I want the profit of Star Limited. The profit of Star Limited was what year? 1,000 from note number 3. The profit there. So that 1,000, we must in this case here subdivide it into 2. You guys will be able to remember this figure of 880. You'll be able to remember it. You'll be able to remember it. So this 1,000 is for a whole year. 1,000 is for a whole year, but we stayed with this subsidiary for only 6 months. So it means 500. And remember, at the end, this thing here, retained earnings at the end is 4,000. So the question is then, what is this X? Remember, it will be X plus this. Remember, we never paid any dividends. We never paid any dividends out of this. We retained everything. So it is this X plus this that has been retained to equal to 4,000. So then what is this retained earnings at acquisition? So it will be 4,000. This is normally how I do it. It will be 4,000 minus, in this case here, this 1,000 times the number of months like that. So how much are we getting, ladies and gentlemen? 3,500. I'm so sure this is not very, very clear. Not very, very clear, but you'll get used to this. And again, this was the first time you're doing this concept of reverse gear. In most of the questions, your examiner will give you retained earnings at acquisition. But in some cases, a crazy examiner will not give you that figure. A crazy examiner will not give you that figure. You must calculate it using reverse gear. You go to the balance sheet, retained earnings, and then you look at what were the earnings for the whole year. It was 1,000. But now you have to divide that into 2. All right. And then now we work slowly. So you're getting, in this case here, this 3,500. This 3,500. Then do we have any fair value adjustment? Oh, yes, we have some fair value adjustment. Please look at note number 4. Look at note number 4. On the date of acquisition, the fair value of the assets of Star Limited were equal to their carrying amounts, except for land and plant, whose fair values were 200 and 800. Remember, both assets in this case here are belonging to Star, in excess of their carrying. So we have fair value adjustment. The fair value adjustment, ladies and gentlemen, here, the fair value adjustment, is there somebody who is able to see the fair value adjustment there being 1,000? Is there anybody who is able to see the fair value adjustment being 1,000? Because of 200 plus 800, 200 plus 800, 200 plus 800, 200 plus 800, because we had 2 assets that were revalued upwards. One worth 200, the other one worth what year? 800. So it is 1,000. And that is it. So please give me the goodwill. Remember the 80 figure here. So 80, subtract this, subtract this, subtract this. Give me the goodwill at acquisition. Give me the goodwill at acquisition. Please give me the goodwill at acquisition. Please give me the goodwill at acquisition. Somebody talk to me. I know the only tricky thing, and I like really emphasizing it, but now we don't have the time. It is this retained earnings at the other things are normally very easy. The other things are normally very easy. The other things are normally very easy. So is there somebody who is able to give me that goodwill? They're telling me it is 2080, 2080. So that is goodwill at acquisition. Do we have any rule on impairment? Is there any impairment that happened? Is there any place they're talking about impairment? Remember, we don't bring depreciations of those fair value adjustments when you're computing goodwill. No, we don't bring them up. We don't bring them up. Do we have any note about? No. So it means that whatever figure you have there, do we have any note really about any impairment? Any impairment? Let's check. Yes. Look at note number 9. Note number 9, as at 31st December 2011, the goodwill of Star Limited and Able Limited, we're not looking at Able here. Able is hot air. The goodwill of Star Limited had been impaired by 200,000. So we have goodwill at acquisition. We have goodwill at acquisition. At acquisition is 2080. Then we have impairment loss. Impairment loss is 200. So then what is the goodwill at reporting? What is the goodwill at reporting? Is there somebody who is able to give me this figure? Goodwill at reporting is how much? Wait, they are not talking to me now. These guys are tired. 1880, the year that I was born. The year that I was born. So this goodwill, I'll come and bring here 1880 like that. 1880 like that. So up to there, are we okay somehow? Oh, yeah. I really sympathize with you, but I hope you're getting something. Up to there, are we somehow together? All right, I'm surprised. And does that apply to the BDS students who are typing by themselves? Does that apply also to the BDS students? Are they following? Are they following? Evelyn, great. Paul, great. Thank you so much. Then, ladies and gentlemen, as I was reading this, there is a place we've seen that we have got fair value uplifts, fair value adjustment. Of course, these are items of property, plant, and equipment. So those are new values of PPE. So I need to come and add them here. We need to uplift our PPE figure. So we have here plus 200 plus 800. But now remember here, you must now think about what your depreciation of these new values. We must think about the depreciation of the new values. What have they told us here? They have told us here, plant is to be depreciated. Remember, land will not be depreciated. The 800 will not be depreciated. It is only the 200 which will be depreciated. So in note number 4, plant is to be depreciated on a pro rata. I'm reading the last sentence. Plant is to be depreciated on a pro rata basis over the remaining useful life, which is 4 years. Oh, I will be able to get everything here. Depreciation on fair value adjustment. So we have here depreciation on fair value adjustment for the item of plant. How do we get this? You will take the fair value adjustment, the revaluation, you divide by the remaining useful life. Is there somebody who is able to see the remaining useful life here? Is there anybody who is able to see the remaining useful life? Remaining useful life. Is there anybody who is able to see the remaining useful life? We am alone in this note number 4. Miss Karanja, they're telling me purity. Thank you very much. So it's 4. So it means 200 divided by 4. 200 divided by 4, oh yeah, this must be 50. This must be 50. But you see, 50 is for a whole year. 50 is for a whole year. And we have stayed with this subsidiary for how many months? We've stayed with this subsidiary for how many months? I mean, depreciation is time prorated always. It's time-based. So in this case here, 6 months. So this 50 has to be time prorated, which gives me what there? Which gives me 25. Which gives me 25, isn't it? Thank you so much, which gives me 25. So minus 25. And that is the end. We will not touch PPE again. So is there somebody who can give me the net figure of PPE because of my space? Take 10,000 plus 4250 plus 200 plus 800 minus 25. Remember, don't depreciate 800 because 800 is for land. 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 Miss Karanja, 15, 22, 25. So in this case here for PPE, if you allow me, I will rub this and write this beautiful figure now. 15,225 like that. 15,225. Now, ladies and gentlemen, within the remaining few minutes, I'll be able to clear everything. I'll be able to clear everything because of what? Because I'm a superstar. I'm a superstar. Note number 5. Panther Limited sold goods to Star Limited for 3,003,000 at a markup of 50% in October 2011. So this guy, amenipatia markup. He thinks I'm stupid. This guy, amenipatia markup. Amenipatia markup. So ameniambia ati markup ni 50 over 100. Tukasema kwamba ukipatiwa markup lazima ukalculate margin. Na tukasema margin iko na makalio makubwa. Somebody told me that thing. I don't know what they meant. Kwamba margin iko na base kubwa, iko na makalio kubwa. Makalio ndio hii hapa. So kwa hivyo sasa margin usema ati ni 50 over 101. Mimi napenda kuongeza tu 1. No. So ukitaka kwa makalio iko kubwa unachukua 50 over 100 plus, of course, the numerator again. The numerator is a profit. Kumaanisha woye, margin na makalio yake makubwa itakuwa 50 over 150. Are we together there? Are we together there? Are we together there? Are we together there? Woi, ni kama tumeconfuse mahali. Hebu tuangalie vizuri, tuangalie vizuri. Tuangalie vizuri. On the date of acquisition, the fair values of the assets of Star Limited were equal to their carrying amounts, except for land and a plant, whose fair values were 200 and 800. We are the ones who are wrong. It is the plant value that we are depreciating. Thanks for that. So in this case here, could you kindly move very fast and talk about this depreciation? It's plant value. And I can see the plant is 8. So 800 divided by 4, whatever you get times 6 over 12. Sorry for that. It's because of speed, times 6 over 12. Let's make adjustment here kidogo. Let's make adjustment there kidogo. Let's make adjustment there kidogo. Let's make adjustment there kidogo. Yeah, please be bringing those things up. Even if I'm calling myself a superstar, I'm also a human being. We make mistakes. We make mistakes. We make mistakes. So now, can you kindly give me the new figure? Give me the new figure here very fast. Where you had that 25, use the new figure. Use the new figure. Use the new figure. So they're telling me it's 15,150. Thank you so much. 15,150, like that. 15,150. So then now we have been able to get this margin. Remember, how do we calculate unrealized profits on stock? Because now this language is leading to unrealized profit on stock. To get unrealized profit on stock, we normally take margin times this lady called RISPA. RIS. Margin times RIS. So in this case, here it is 50 over 150 times RIS. The intersale was 3,000. The intersale was 3,000. Remember, RIS is remaining intra-sales. Remaining intra-sales. And the remaining intra-sales, we are told half of these goods was still in inventory of half of them. So out of the 3,000, half of them. So can you kindly give me this unrealized profit on stock? Is there somebody who is able to give me this unrealized profit on stock? Anybody who is able to give me this unrealized profit on stock? Queen Magdalene, wanasema ni 500. Queen Magdalene wanasema ni 500. Queen Magdalene wanasema ni 500. Evalina wanasema ni 500. Thank you so much. So 500 is my unrealized profit on stock. What do I do with that figure? What do I do with that figure? What do I do with that figure? Where do I take it to the balance sheet? Where do I take it to the balance sheet? Where do I take it to the balance sheet? Where I'm waiting to be given. Less from inventory, yes, because inventory is overstated by that profit. Minus 500. Minus 500. And then now, ladies and gentlemen, from there, we move on to the next note. If you allow Mwalimu there, we move to the next note. Next note is note 6 here. As at 31st December 2011, Star Limited owed Panther Limited 750. Owed Panther Limited 750. Remember, I'm cutting those 3 zeros. Students don't even know that whenever you see the balance sheet has cut 3 zeros, even how you think when you're reading the notes, you must be cutting the 3 zeros throughout. Otherwise, you'll get yourself in a mess. So then this 750 between Panther and Star is an inter-owing, is an internal owing. So then how do we account for it? I know that that internal owing is fake. I know that that internal owing is fake. So if this internal owing is fake, ladies and gentlemen, if this internal owing is fake, ladies and gentlemen, of course, in this case here, it is a receivable in one company's eye and a payable in the other company's eye. All right. So then I'll have to go to the receivable here. I subtract 750, and from the payables here, I subtract 750. Fortunately, there is no cash in transit, so I don't have to think so much. Tuyishimire is asking a very good question there. Do we use margin or markup? We shall use margin. We shall use margin. We shall use margin here. We shall use margin because it's margin times remaining intra-sales. Remaining intra-sales. All right. So do we have any other thing? Do we have any other thing? Do we have any other thing in this question that we can do within 5 minutes? Not unless, ladies and gentlemen, you guys love this. Yes, we can do, investment in, how many minutes do I have? 5 minutes. 5 minutes, I'll be able to account for the associate. Mentioned there, investment in associate. That is the easiest thing. I mean, so many guys keep on crying to me that Mwalimu associate is very hard. No, these are free of charge, Mark. What is an associate? It's just an ochugunu, something small. Ochugunu, something small. Something small, 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 small. Small or take, small. Investment in associate. So investment in associate, ladies and gentlemen, investment in associate. So investment in associate, what do we have here? We take the cost of the investment. How much this associate cost us? So in this case here, we bought, if you remember note number 2, we bought 80,000 shares and each share is going for 55. Whatever answer you get, you divide by 1,000 to give me the cost of investment. Whatever answer you get there, so 80,000 times 55, how much are we getting in terms of thousands? We am alone. Ladies and gentlemen, I would want to welcome all the guests that we have around here to ensure that they join RCM College. We have great online classes, like now what we are doing here. We'll be able to, of course, like now, if you guys are careful, you must have learned that I've already begun doing what we call low-hanging fruits. I mean, which kind of fruits in this case here should you go for, which are having many marks and yet they're really low? So we have a low-hanging fruits, kind of revision program, which will need to join us as we clear the syllabus and then we revise like that, then we'll be okay. So, and of course, if you will be interested in joining us, this is our number, 0793 555 000, like that. 0793 555 000. Call us and we shall be able to assist you. So in this case here, they're giving me cost of the investment is 4,400. So remember, it's called IAS 28. It's equity accounting. Equity accounting, we look at the profits and we look at what are the losses. So in this case here, come and give me share of POP, share of post-acquisition profit, share of post-acquisition profit. So the post-acquisition profit hapa ni gani ya able sasa? Post-acquisition profit hapa ni gani ya able? So remember, in the post-acquisition profit for the associate, you look at the growth in retained earnings. Here inanga maneno, growth in retained earnings. Only that, growth in retained earnings. I think, ladies and gentlemen, instead of me rushing very fast around this, we would rather start from here. We would rather start from here, exactly from where we stop here in our tomorrow's what here? In our tomorrow's session. In our tomorrow's session. Is that okay? Have we enjoyed, in this case here, our session? Have we enjoyed our session? Have we enjoyed our session? Then today you must also do mwalimu a favor. Today you must do mwalimu a favor. You guys, I help you a lot. 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 Even though I'm quite not a very poor man, but today you will be the ones buying mwalimu lunch. So that lunch, which in this case here today you are going to buy, I'm so sure you're going to buy a good lunch. You're buying mwalimu lunch today, and I'm very serious. Today, my lunch is not that expensive. This is my number. This is a great knowledge you've gotten. So in this case here, you send mwalimu only 100 bob. If that happens, I'll be getting 10,000 shillings in the next 2-3 minutes. 2-3 minutes. 2-3 minutes. And that now will be able to give me great lunch with my dear madam. You know what, walienda boarding water. And both of us, madam na mimi, we work from home. We work from home. Mwambie leo kuna kupika, tuende. So you've enjoyed. Thank you so much. You have the number here, and I'm very serious. Today, I'm eating lunch from my students. From my students. I'll not be the one giving you lunch always. Today, I'm getting lunch from my students. Thank you so much. Be blessed. See you again, same time tomorrow. Bye. 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 183. Nani analeta huyu figures tofauti? 183 wewe. 183 0721 183. Lazima mna appreciate mwalimu. Napatia mwalimu maua yake akiwa na nguvu namna hii. Akiwa na nguvu namna hii. Thank you so much, and of course, a part of that man I'll be able to share with somebody. I don't eat this lunch alone. Thank you. Bye.